Analysts at Laurus Africa Securities say they expect the bullish momentum on the Ghana Stock Exchange to extend into the fourth quarter of this year on the back of a sustained disinflation trend. Narteh, Senior Research Analyst at Laurus Africa Securities, joins me now for more on this discussion. Jordan, thanks a lot for joining us on the show today. Let's do an overview of the Q3 market performance and then looking at the highlights of the latest inflation report. You're seeing Ghana sustain the ninth consecutive month of inflation slowdown, printing 9.4%, well on track for this single-digit inflation figure. Your take around the market movements we saw in Q4 and the latest inflation data.
Thank you, David, and good afternoon to your viewers. So like you mentioned, we are of the view that we could maintain a bullish run for the end of the year. However, in Q3, we saw a stronger upward momentum where at the moment we have various stocks at an all-time high. Counters like GCB currently at 14 cedis for 11 pesos. MTN also hit a record high of 4 cedis, 35 pesos. And you also have EcoBank coming in, the likes of Access Bank, and also cheap small cap stocks like Lightstone and Camelot also coming onto the scene. And so this was the momentum in Q3 in terms of counters. However, given the bullish run we've seen profit taking in stocks like Guinness Ghana and also Unilever in recent times on the stock market. We've also had a market cap cross the 160 billion mark, and also the composite index crossing the 80,000 mark in the Q3 2025. So largely these were the notable highlights in the market. Overall, in terms of return, you'll be counting more than 13 billion Ghana cedis. And in terms of dollars, you'll be looking at over $1 billion in capital gains to investors in the market in Q3 2025.
And definitely the stronger disinflationary trend we're seeing is also spurring the appetite for the equities market here. But let's look at Q4 now at this moment and how strong the bull run will extend into the fourth quarter of this year and possibly into 2026. Yes, we've seen broad-based gains across the banking and FMCG stocks, but walk us through some of the further insights we should expect in Q4.
Okay. And so in Q4, we expect the bullish run to continue, except that given the fact that we have stocks hitting record highs, you could see some profit-taking tweaks here and then some of the sessions. However, our bullish run is anchored by, one, the fact that we are gradually, going into rate cuts cycle. And the fact that we expect investors to look at alternatives, and then the equities market is one of these alternatives which is able to sustain investor capital. And two is the fact that we've seen quite a robust run in terms of disinflation, which is helping consumer wallets. And as such, this should influence or improve revenue levels and overall earnings outlook for various firms. I think for the banking sector too, what is really driving the demand is the fact that clearly it appears that we've had, I think, near to a mild impact so far from the DDP impact. I could say that the impact is far behind the market, and the bank's balance sheets have actually bounced back. So we could see dividend payment from some of these banking counters, GCB, EcoBank, and StanChart in the future. So this play should keep investor momentum on the counter. And that's on the local side. I think we should also expect foreign participation, given that we've seen some considerable improvement in our macroeconomic climate. They should, attract foreign direct investment in the equities market as well.
But let's also talk about near-term risks as well, and making a particular reference to the recent CD depreciation. Do you think the currency will make a turnaround in the quarter?
Okay, so yes, we point the recent depreciation. We did about 7% depreciation in August and over 5% in the month of September. We are gradually seeing a tone down and demand pressures on the currency. And then we expect that in the course of the Q4, the currency should find it a fair place within the 12 band, and at least, and that should still help us end the year on a good foot. So it remains a risk, but I mean largely to month-on-month inflation, because year to date we're still at a good foot in terms of the currency.
And then just before I let you go, you had already talked about expectations from the Monetary Policy Committee meeting, but in November, what sort of rate cut should we expect on the back of this inflation trend?
Okay, so looking at the disinflation we've seen, we're currently at a single digit, 9.4%, and this sits just close, just within the the Bank of Ghana's medium-term inflation target, which is between 6% and 10%. And with this in play, we believe that it gives the MPC confidence in cutting. And also, in fact, looking at it quantitatively, we are over 1,000 basis points above monetary policy rate as it stands. And I mean, that gives more room for, a bold cut going into November 2025. So our expectation is at least a 450 basis point drop into, close to the mid-teens, to help anchor inflation expectations in the future.
Mark Jordan, thanks a lot for your time. That is Mark Jordan, Narteh, Senior Research Analyst at Laurus Africa Securities.